Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So lately I've got so many videos planned over the last few weeks, but I have not had the time to record any of these, or it takes a lot of time, of course, to edit it, to record it, edit it and upload it and so on. And work has been killing me lately, so apologies for not posting as regularly as I should normally do, but inshallah I'm going to continue posting as always, of course. But it's been tough to actually get the time to sit down and record these videos and then edit it and then send it to you guys. I genuinely want to do as much as I can for the community, but sometimes of course work and family and everything else gets in the way. But alhamdulillah, inshallah we will continue doing this as much as we can. And I genuinely would appreciate if you can like the videos, subscribe to the channel, because like I always say to you guys, it takes a lot of time and effort to put these videos together. Genuinely does. So I would genuinely appreciate if you can join us in the Patreon account, if you can join us in the in the community by subscribing to the channel, of course, and open that the bell notification so you don't miss anything that we post in. And of course, like I always said to you guys, you get a lot out of it by joining on the Patreon account. It will cost you 15p per day. Join it, try it, see how it goes, inshallah. So lately I have been, of course, trying to reach out to, of course, as many brothers as possible, brothers and sisters out there, just to kind of help and with their investment journeys. Now we have a lot of newer investors, younger investors that are really asking a lot of questions about where do I start, what do I do. So recently I put together a few videos, and I think if you haven't seen it, the last video we talked about investing either lump sum money in one go or dollar cost averaging and understanding the pros and cons in each. If you haven't seen that one, go and watch that. That's our last video. And then previously we talked about two types of basically two videos where we talked about all the companies that you can invest and ETFs that you can invest. So if you haven't seen this part 1 and part 2 videos, so it's called best Sharia compliant UK US stock investment for beginners. Okay, so if you haven't seen part 1 and part 2, have a look at that. Even if you're not a beginner, you will find hopefully something in there as well. What I want to do today is now talk about one of the things that I always talk about is your time horizon. Every time I get a message from one of you, I always say to you, okay, what is your time horizon? How old are you? What is your time horizon? Meaning, how long what is your investment time horizon? How long do you have until you retire? So if someone says to me, I'm in my 20s, I'm like, okay, then you need this and that. Okay, again, none of this is financial advice. It's just kind of quite common sense. If you're young and you are, say, in your 20s, you shouldn't just be focusing on like income or dividend paying companies. That's not going to do a lot for you. You can still get some income, but your main focus should be growth. But if you can get a bit of growth, bit of dividends, that's absolutely fine. But main focus should be growth, because you got, let's say, for example, 20 years, 30 years time horizon. Why would you be focusing on buying companies that are only going to grow 2-3% every single year, right? So what I want to do today in this video is to basically group people into like 3 different categories. So you've got the young ones, we got the middle-aged, and then we've got people who are ready to retire. So I built a portfolio for each one of you guys, but these portfolios are not kind of very realistic in a way, but I'm just giving you a few companies that you can look at and then use the same methodology, same method to get more companies like that, or even complemented with some ETFs. So I might give you like 5-6 companies in each and say, okay, these are the type of companies you should be investing. It doesn't mean go and buy these companies. It just means this is the type of companies you should be investing right now at your age and so on. And that's exactly what we're going to do. So I'm going to go over as much as I can, inshallah. And if you appreciate this type of content, please genuinely press that like button, subscribe to the channel, because what it does is, as soon as the algorithm realizes a lot of us actually liking the videos, that then it suggests this to more people, and we're gonna get, inshallah, hasanat from doing that, inshallah, because we're gonna reach more brothers and sisters who potentially will start their investment journey, and hopefully we can help a lot more brothers and sisters out there, inshallah. And genuinely, I mean it. If you can do that, that will be absolutely wonderful. Forget the Patreon. If you don't want to join us, if you don't want to pay that much, fine, but just like the video, subscribe to the channel, because it means genuinely the world to me. Okay, let's move on. Right, so here is the first portfolio. So this is for young investors, and I say 20 to 30. So if you are in your 20s, and you know, from 20 all the way to 30, what kind of companies should you be looking at? Okay, so right now, in my opinion, these are some of the companies that you should be looking at. So companies like which is ServiceNow, for example, Uber, CrowdStrike, Eli Lilly, Salesforce, and ASML. Now, these types of companies, and I'll show you exactly what these companies do in a sec, and how this company are doing in terms of the growth side of it. Okay, but these are more of a growth companies. Okay, and again, they are not just one thing you need to think about. Okay, this is not very volatile companies. These are more, they're becoming mature companies. CrowdStrike, for example, might be the one that's still moving a lot in terms of beta wise, but majority of these companies are very stable, but at the same time they are growth companies, and I'll prove it to you in a second. So the first of basically the companies that we just seen, and I'm going to do just for a few, just to kind of prove it to you. Okay, ServiceNow is basically similar to Salesforce. They are focused on cloud side of things, security side of things, and they work with a lot of companies out there, small businesses, large businesses, and so on. The estimated basically earnings estimation for this company is this. Okay, if you look at year over year, they're expecting double digit growth. Okay, 27, 20 there, 22, and so on. So when it comes to revenue side of it, they're expecting also double basically digits and so on. The other companies that we looked at is Uber, for example, and this here. Okay, so we've seen Uber there. Let's see how Uber is doing. Okay, double digits, 100 something percent, 40%, 20%, 26%, and so on. CrowdStrike was another company that on that list. Again, I get 26%, 20%, 26%, 27%. Same thing when it comes to revenue side of it. So that's the reason why I picked these companies for someone who is still young, because a lot of these companies are growing fast. Even Eli Lilly is actually growing a lot, because recently the company has the company has come up with the diabetes. They're using one of their existing kind of product, and now that became a weight loss, and for that reason it's gone up so much. Look at this, 2024 they're expecting 158. By the way, none of these companies are right now a buy, so you have to be careful. Okay, I say none of them. Some of them are not really a buy right now, but they are growing really fast. Okay, now let's look at the summary. So this is kind of quick overview. So the revenue the last 5 years, this is how much they've grown, which is really good. Look at the EPS. Okay, and the free cash flow for the last 3 years, and of course Uber recently became free cash flow positive, so that doesn't add up. And also Eli Lilly has a problem with the free cash flow right now. Other than that, they're all absolutely fine. Now when you click the summary, okay, you could see a little bit more details about the company, so what the analysts are thinking of. So right now some of these companies are basically according to Seeking Alpha and according to Wall Street, they are all a buy. And as you can see, because they're green, this means they are hold. These are buys right now, so according to Seeking Alpha. Okay, now in terms of valuation side of things, if you click, for example, health score, it kind of gives you an idea. A lot of them are neutral right now, so breakdown for the health side of things. And then there's a little bit of information here which really doesn't give us a lot of information. Now one of the things I want to show you for these companies is this part. Okay, so we've already seen these two here. We've seen Quant is actually saying valuation, it seems very expensive based on their 5-year averages. Okay, right now they might say it's this, but based on the last 5 years and so on, they seem right. The valuation grade right now is basically F and D's, which is basically not great at all. But look at the growth side of it. Look at the profitability and momentum. Okay, EPS revision and so on, especially these three here. So these are the important part. So if you're still young and you're out there and you're looking for companies to invest in, okay, look for this type of companies that have a very high growth, are growing double, triple digits, whatever, right? Double digits and so on, and just focus on that. And of course, buy some ETFs and mix the two together. Right. And just finally, to show you how they performed against the S&P 500, these companies in the last, let's just focus on last 5 years. Okay, as you can see, ServiceNow is actually 202% up. The S&P 500 only 9%. This basically is, by the way, total return. Some of these companies don't pay any dividends, so it doesn't really matter. 205 for basically for CrowdStrike, Uber 115, Eli Lilly 834, Salesforce 72, the only one that's kind of underperforming the S&P 500, and ASML 353. So they are actually doing really well against the S&P 500 generally. Okay. Next portfolio is that middle-aged investors. So basically people in their, say, between, I'll say 30 to 40. In fact, that should say 30 to 40. So if you are the age between 30 and 40, so just my kind of age, okay, and you want to invest in the stock market, this is the type of companies that you're looking for. You should be looking for. So you mixture of growth at the same time with some income, but the income should be focusing on dividend growth rather than receiving that income right now, because we don't need that money right now. I don't need the money that I receive from my portfolio is reinvested straight away into the portfolio, right? So I don't really need it. I don't actually need to withdraw that money. So what do I need to do? I need to have companies like that are growing their dividends. So this company, for example, S&P Global, AMD doesn't pay any dividends, so for the growth side of it, KLA, for example, pays dividend, but they're growing that dividend. Merck, for example, is also doing the same thing. Procter & Gamble is doing the same thing, and also Broadcom is high growth at the same time they have a decent dividend as well. When you look at their revenue growth for the last 5 years, it's really good. EPS is actually okay, really good. Of course, this one is very flexible, basically for volatile right now, AMD, but it's becoming very mature company. They're acquiring other businesses. They're getting into that data. They've been in the data center game. They are competing with with Nvidia and so on. So they are getting there. And free cash flow is actually nothing to worry about, apart from Procter & Gamble, just for the last 3 years. If you look at the last 5 years and so on, it's slightly a different ball game. Okay. Again, when you look at the rating side of things, as you can see, some are buys right now, some, of course, a couple of holders, according to Seeking Alpha Analyst, according to Wall Street, they're all buyers right now. According to Quant, they actually all hold, and some of them are very, very expensive right now. In terms of growth side of it, they've got a bit of growth in there, they've got a bit of profitability, it's absolutely fine, and this is the important part. These companies are very profitable because we need that solid dividend, we need that solid growth as well. Momentum is absolutely fine, and so on. Okay, so that's the bit. Now, if we look at dividends as well, because we want to see the companies actually growing that dividend, right? So if we look at the dividend side of things right now for these two companies, what you will notice is this. Okay, if I click this and just go to the other side, but remember, not all of them pay dividends. Okay, so for the dividend growth for the last 5 years, so this one has been paying, it's about 11%, which is really good. So the double digits growth there for 50 years in a row. KLA has been basically 14% and 14 years of increase in that dividend. Merck, for example, about 8%, almost double digits there, 8.4, 13 years of increase in that dividend. Procter & Gamble, about 8 to 6%, 67 years of increase in that dividend. And then Broadcom, for example, about 16%, about 13 basically percent in terms of and 13 years of increase in that dividend, which is absolutely huge. Okay, so that growth for me is important, and also the fact that the company is still a high growth business. And now what I'm going to show you is how they compare against the S&P 500. So this is the S&P 500, that's S&P Global, and the rest of the companies there. As you can see, if we just focus on the last 5 years, we'll do last 5 years and then we'll do last 10 years. Okay, we will see basically where we are. So the last 5 years, you can see the S&P and Global. Okay, basically it's about 103%, the S&P 500 about 90, AMD 375, KLA, for example, 521, Merck 67. So the one that's underperforming right now, as well as Procter & Gamble. So these companies, because of the dividend growth side of it, okay, I won't worry too much about the fact that they're not beating the S&P 500, because when you're at that age, you also need that growth. They're stable, they're very stable, they're very safe companies, if you like. They're not very volatile, so you need that in your portfolio. Okay, and then we get basically 558 from Broadcom as well. So it's a mixture of companies. So you got a bit of growth, you got a bit of dividends, and at the same time things are basically looking out really well. And overall, basically they are very similar to the what the S&P 500 is doing. So last 10 years, we're looking at about 579. We're looking at 180 from the S&P 500. AMD over 3,600, 1,500 for KLA, Merck 175. So almost basically doing exactly what the S&P 500 is doing. Procter & Gamble 171, not far off from the S&P 500. And then Broadcom, we're looking about 2,500% up in the last 10 years, which is really good. So that's the kind of portfolio you should be looking at if you are in your 30s, let's say 30s to 40s. And finally, what if you are retirees? Okay, you are in your 50s or 60s, even 50s and up after. Okay, you should now be, if you're in your 50s, you should now be looking at in fact, let me just change this. You should be looking for more income side of things. So you want that money to come to you every single month rather than just base, and you want to use that money. Maybe in your 50s you might not want to do that, maybe take some of it, but after 50s and 50 and around 60s and so on, you should be basically, you kind of depending on that income, right? So these are the companies. UPS, I'm going for now companies that are paying solid dividends, okay, potentially increasing that dividend year after year, okay, and they have a excellent free cash flow, net income, all of those things to cover that whole dividends. Okay, I've selected these basically 6 different companies. Again, there are a million other companies out there that will do similar jobs, but you just have to do your research. Okay, when we look at the rating side of things, as you can see, some of these companies right now are not a buy, or just some of them are hold, some of them are buy. So you can pause the video, have a look at that. Valuation is a little bit expensive. Growth grade, okay, it's not great because these companies do not grow very fast. If you want a growth, of course, you at this age, you're really thinking about that income side of things, but they are very profitable. That's the most important part for me. This is it. The growth will force the other 2 portfolios. This one, we're looking for companies that are very profitable. And then we get to the dividends part. This is where the companies shine. A lot of them are doing really well, from the safety, from the growth, the yield, the consistency is absolutely there. And if we just move it to the far right, okay, you will see here the 5-year growth in terms of those dividends. There you go, the 5-year, okay, they are absolutely fine, absolutely nothing to worry about. Years of growth, okay, 14 years, 10 years, 14 years, 1 year, 6 years, 51 years. Remember, I didn't pick all the dividend aristocrats or anything like that. I picked the companies that I knew, okay, that are doing absolutely fine in terms of growing that dividend for consistently. So you've got companies that will pay you over, so the forward yield right now for this one is 5%, 3%, 2%, almost 7% for Rio Tinto, 4% for EOG, for example, and over 3%. These are the forward basically, and this is the current ones. So 5%, 3%, okay, 2.7%, 6.9. So it's more or less the same. The Rio Tinto, they're saying it probably does not going to increase again, and so on. So overall, okay, what I'm interested in this portfolio is that solid income that I'm going to receive every single month, and this is exactly what you will receive from these companies. Okay, so that is what I wanted to share with you guys. So when you're investing in the stock market, there's no one way of investing. There's loads of different ways of investing, but you really need to think about. Okay, and finally, by the way, before I move on, I'm going to show you basically how they performed against the S&P 500 in the last basically 5 years and then 10 years. Okay, right, looking at the UPS, about 35%. We've already seen the S&P 500 is about 90. Again, we're focusing on more dividends, so we're not going to beat the market every single year. 272 when it comes to ADV, for example, and 38% when it comes to Hershey. Rio Tinto, 98%, so it's beating the S&P 500, which is really nice and interesting to see. OG is also beating the S&P 500. KBM or Kimberly-Clark, for example, about 23%. And what happens in the last 10 years? Okay, UPS about 81%. Again, not beating the S&P 500. ADV is doing absolutely amazing job. Hershey's done absolutely fine, closer to the S&P 500. Of course, Rio Tinto is actually almost done the same. Well, a little bit below the S&P 500. This one about 50%, which is very interesting. And I think there's a reason behind why it was only 50%. I can't remember now, but 92% when it comes to Kimberly-Clark. So you've got a bit of a momentum, and you've got a bit of a overall. So you've got basically different types of companies that you can invest in. And like I said, I'm only giving you this as an example. There are loads of different ways of investing. So if you are young, focus on growth. If you are in your 30s, focus on a bit of a growth and a bit of a dividends as well. If you are in your 50s and so on, focus on income. and mixed with dividends paying companies as well as ETFs. ETFs are easy way to invest in the stock market, and if that's what you're interested, of course invest more on ETFs, and inshallah over the next few years we will get dividend paying ETFs that's Sharia compliant. Inshallah we will get that in the next few years. So that's what I wanted to share with you guys, and now the video is slightly longer than I wanted it to be, but yeah, so just to focus on those things, and I've got a few other videos I'm basically will be sharing with you in the next couple of days, but please, as always, okay, please don't take this as a financial advice. It's just my opinion. You might disagree with me completely, and that's absolutely fine. That's your opinion. I'm entitled to my opinion. You're entitled to your opinion. Do what you need to do, inshallah. Do your own research, and of course, as always, please, okay, help the community by sharing good practices. That's all we want, okay? I'm doing everything I can, and I need you to do the same thing, inshallah. If you can join us the Patreon account, of course it will help the channel, it will help me, inshallah, in the long run. Have a wonderful day. Assalamu Alaikum.